Good evening, everybody. I'm Shannon Rose McAuliffe. You can call me Shannon Rose. I am here with Theo Fields, and we're representing the Office of the Arts in yet another one of our workshops for the 15K Creative Arts Competition. This evening, our topic is doing budgets in a for-profit context, and we're joined by Kit Hickey, who's going to take us through some of the fundamental elements of that so that you'll be ready and prepared to get sort of the financial bits of your fledgling ventures off the ground. So without further ado, Kit, would you like to introduce yourself and then take us away?
Sure. I know most of the people that are here in person, they'll do a more formal introduction for people that are watching later, but then it's going to get informal again. So my name's Kit Hickey. I was Sloan class of 2012-13. I dropped out, so it's a little confusing. But I started a company called Ministry of Supply, which integrates technology into business clothes to make it a lot more functional and fashionable. Before that, I was in investment banking, so I had quite a bit of experience with financial modeling and budgets and fundraising and all that stuff, but it's quite harder as kind of an entrepreneur. And so I ran the company for about 6 years as chief retail officer mostly, so in charge of everything revenue, from marketing to stores to e-commerce to branding to marketing to customer experience. And then I left and I came to MIT, where I am an EIR entrepreneur in residence. So I meet with companies across campus, and then also teach 2 classes at Sloan, one in the fall, which a lot of these folks were in, and then one in the spring on teams. So I'm excited to be here. The Arts Prize is always awesome. It's always really fun to see other people that are interested in like the arts or fashion or consumer and all of that. So with that, I want to get to know who's here. I know a lot of you guys, but just really quickly, if you guys could say who you are, what program you are, I think a lot of you are MBAs, and what you're working on, and then you can kind of pass it to somebody else. And that will also help me kind of structure the program, as well as you guys to get to know each other a little.
You know what? Do you want to start with Theo, since Theo is working with me in the Office of the Arts, but I don't want to give short shrift to somebody who is instrumental in this workshop series.
Yeah, thank you. So first year MBA in the entrepreneurship and innovation track. So that's how I got to hear from Kit in our classes, which has been fantastic. Interested in a few different kinds of startups. Right now I'm kind of going deep on mobility, and then also like enterprise SaaS, which neither one of which is arts related, but I am really interested in the arts as kind of a like a through line or a passion that I've had for a lot of years. And so that's what drew me to the competition, and to help kind of find the right engagement among students, among faculty, among judges, to help Shannon Rose and the Office of the Arts make this competition really great and successful. And so I will pass it over to Steve.
Thank you, Theo. Yes, Steve, first year MBA along with Theo in the same motion. I also in the E&I track, dabbling with a few idea phase startups at the moment, looking at the mental health space, looking at the gaming space, also looking at the biotech space, so casting a really wide net. But again, arts is a passion, and learning how to budget is something on my radar, and that's what brings me here. Cedar.
Sure. I'm also a first-year MBA student, E&I track it, as you know. I'm working on an idea my idea is to build a digitally native e-commerce brand that sells art supplies. So I'll be spending the winter IAP working on it through Fuse. And I will pass it to Rio.
Hi, everyone. So I'm Rio, also a first-year MBA. My Wi-Fi is very bad right now, so I'm going to keep my camera off, but sorry, because we're in such a small group. I am also interested in E&I. I'm currently looking more at kind of sustainability and consumer fintech, but really interested to hear more about budgeting and find out more about other industries. I'll pass it over to Javier.
Hi everyone. To break to be a bit of a contrarian, I'm not an MBA. I'm in the Integrated Design and Management program, which kind of blends design, engineering, and management all in one. And I'm a former entrepreneur, and I'm exploring my next venture, which I think it's going to be in the space of mental health. And I think art and design can be a good way to tackle some of the issues that we find with modern technologies. So just exploring around. And I will pass it to Will.
Yeah, hi. So I'm also a first-year MBA student, also in the E&I track. So I'm currently doing primary market research for a software solution for small and medium-sized companies. So just about to hand in a sandbox application and really appreciate input on the budgeting part here. Also, last year I was finance responsible in a startup, so I have done some budgeting and fundraising before, but I haven't actually been part in the startup phase itself. So are we missing anyone? Oh, Bugu?
So good evening, everyone. My name is Bogu. I am a third year, dual between the MBA and the Integrated Design and Management programs, also in the E&I track, or yeah, still. Currently working on a venture that's looking to provide the back-end tools to support emerging fashion and retail brands from Africa to make them more digitally native. So very timely this session because we're in the process of trying to at least formalize like our budget and everything as we move forward. So looking forward to learning things today.
And hey, Marissa, who I know quite well, you just joined. Can you give a quick intro on who you are?
Yeah, absolutely. Hold on, let me open my screen so you can see my face. Hi, everyone. I'm Marissa. I'm a second year Sloaney. For the past year, I've been working on a baby skincare startup. So now we need to I'm here today just because we have to get we're going through the budget process, and really any sort of advice or tips around formalizing it more to have some structure will be really helpful.
Okay, well, thanks. That was really, really helpful. It was actually really great to hear what you guys are working on because I know a lot of you, but didn't realize some of that. So I've never seen a good workshop it's really hard to teach budgeting. So what we're going to do today is we're going to make a budget for 20 minutes for Ministry of Supply. And then we're going to see the actual budget and we'll see what we did wrong and what we did right. And then we'll do questions and kind of best practices. All right, so we're going to do the income statement, which is basically how you're thinking of a budget. When you're putting together a budget, you want to do it monthly, usually. And a lot of this in the early days is guesses. So everyone knows it, even investors, especially investors, I guess. But they really want to see your thought process, how you're thinking about things, and kind of how you can explain things. So as we go through this, I know you know zero about Ministry, except what it does. But we're going to kind of think through how would we think about what these numbers would be, or how would we get through these numbers. So Steve, I'm going to have you kick us off. Let me get a blank page to do this with. Hold on one second. All right, I have the real budget that we will look at after we do this one. And then let me just get, I hope this is a blank page. It's a blank page. All right, so Ministry of Supply is a clothing company. We're going to do it 3 years in, which is 2015, because that's the budget I had to show you guys the real one. So Steve, where do we start? What's the top line of a budget?
Oh, Steve, you're muted still.
Do we want to, good question. Do we want to look at what our costs are going to be?
That is great. So that's going to come next. All right. But that is most of it. So Will, do you know what the top line would be on a budget?
Yeah, I think that would be revenue.
Yes. Okay. So Ministry of Supply sells business clothing, both on e-commerce and in stores. So how would you think about coming up with what the revenue would be? Well, I'm going to stay with you for a minute.
With me? Yeah. I think I would think about, you mentioned these two different channels, so I would probably break it up into those two, web and retail. And then I would probably think about what is driving the revenue. So it's normally some function of how much do you expect to sell and what price do you expect to sell it at. So a quantity and a price, something like that.
That is great. Okay, and since we're 3 years in, there's a few things you would want to do. You would obviously look at last year, and you would see kind of how much you sold in, let's just say it's March. So we know retail is extremely seasonal. So we would look at last March, see how much we sold, and maybe we would grow it by a certain amount. We might look at last month. So if we're doing this in March going forward, we'd look at how much did we do in February, and where are we above last year, where are we below last year. We would really want to look at that price. So knowing, like, are we raising prices every year? Are we keeping them straight? And then also that quantity. So when you're thinking about quantity, you're going to see how many people, so for web, you're going to see how many people come to your website, right? And then you're going to see what the conversion rate is. And that should give you kind of how people are buying, because you need to know both of these, because you need to know, am I driving traffic to my website, and then how people are converting, right? So you're looking at e-commerce, and then you're looking at retail for the revenue. What's the first cost? Does anybody know the first cost on an income statement after revenue?
Should that be variable costs?
Can you talk? Can you explain what you mean by variable costs?
Cost of goods sold.
Yes, that's exactly it. So that's called COGS, or cost of goods sold. How would you figure that out? And let's just say it's not year 3. Let's say you're starting your company. How would you think about what are your COGS? And well, actually, let's pause. Explain for everyone else, what does COGS mean?
Essentially, those clothes that we sell, how much does it cost to get them into the store, essentially? So what's the raw cost of the materials, but also the labor and maybe the freight to basically get them to the
exactly
store.
Yeah. So if you're selling business shirts, how much does it actually cost to make that business shirt? That would include the fabric, it would include the manufacturing, it would include the buttons, it might include the packaging. All right, Marissa, you did this a year ago. So you're thinking about COGS for your baby skincare line.
Yeah.
How do you think about how much it's going to cost to make a Vital or one unit?
Yeah, so what we're sort of separating it out into the cost of the actual formula, the cost of primary packaging, the cost of secondary packaging, and then there's a shipping cost to like bring all those pieces in to one central place.
Okay, so the primary packaging, can you explain for the folks that might not know the difference between secondary?
So by primary packaging, like we're creating a sunscreen tube, that would be the actual tube, versus secondary packaging would be the box, like the cardboard box the tube would be in. And a lot of these products are made in Korea and China, and so we have to pay a shipping cost to bring those pieces in.
And so if you're not, are you manufacturing yet?
We have a contract lab manufacturing the formulas in New Jersey, and the way it goes is that they're actually getting the primary packaging shipped to them, and they fill the tangible product.
Okay, and so how do you know these? How do you know how much these are? Is that part of that contract?
Yeah, it's part of the contract. And then, one thing you could do for shipping, if you want to really split up into 2 ways, there's a cost associated with shipping the primary and secondary to America, so to like where that lab is going to actually fill the product. And then we have a third-party inventory partner who's picking up the product, storing it in their like warehouse, and putting like the actual like the primary product in the secondary packaging. And the way we have it is they've given a specific cost for like each of those components.
Awesome. So that's really helpful. And that was such a great example, even though it might not be applicable to your industry, is you really need to think about, when we think about product, usually we just kind of think of the end product, or we tend to forget a lot of these costs. So you want to think about like, what is that actual product? Like for us, it included, similar to Marissa, it would include the shirt, but it would also include tags. Those are a cost you have to pay. It would include the packaging the shirt was in, and then it would include the shipping as well. And and similar, we had primary packaging and secondary packaging. So my overall thing is, you're thinking about COGS. and you're thinking about cost of goods sold and kind of like knowing what that actually means for your industry. So after that, you're going to have gross profit. And that is basically revenue minus COGS. What do you guys think for retail? What percent of revenue is our COGS?
This is based on nothing, but maybe like 25%.
Okay, that would be fantastic. Like 50%. But 25% is a great guess for a lot of clothing that comes like off the shelf fabrics or simpler manufacturing. That would be more correct. But because ours was so much higher than industry, because we used advanced fabrics and advanced manufacturing, this was a massive number for us. So every investor meeting, we would always be looking at that gross profit number and can we get it up 1%, 2%. So again, kind of like what are those big numbers in your industry that's really like either going to raise red flags or that you can work on controlling. All right, so after that, we go to operating expenses. Who has some guesses on kind of what would be some, like what is operating, I guess at the most vague sense, what does operating expense mean?
Is it the money you need to spend in order to keep your business operational? So things like staff, office space, things like that.
Yeah, exactly. So all those other costs that you're spending to act on your business. So you said staff. Sorry, Nate, quiet. I have my 4-year-old in here with me. So what are some costs that come from staff? Not only, so I know that there's payroll. What other, those early days, what else might you be thinking about when it comes to your people costs?
Benefits?
Yeah. Perfect. Who thinks they know another kind of operating expense?
Would one, like if you're a company with a strong digital presence, like just to keep your website up and running, you usually have to pay a lot of fees for that.
Yeah. So we would call that e-commerce. Sida, what do you think?
Additional SG&A costs. So I guess there's like rent.
That's for the office?
Yeah. And if for retail stores as well, you would have leases.
That's right.
And I guess maybe warehousing as well, right?
For folks who might not know, what does that mean?
Oh, well, essentially you're carrying physical products that need to be stored somewhere, and probably the stores only held limited stock. So you need to have, either rent a space yourself or have someone else store the goods for you.
Right. So fulfillment, where they would actually hold the goods. We're missing a really big one. What would be a huge cost?
Marketing and advertising.
Yes. You're starting a consumer company. How do you think about how much that marketing and advertising costs are?
Oh, like a percentage of revenue. I bet.
Yeah.
That's ideally like 15 to 20%.
Where are you coming up with that number? Or pretend I'm an investor. Why is that your assumption?
So my assumption is just based on at least past research on like comparables, or just like specifically looking at public companies, seeing how much they tend to spend on advertising as a percentage of revenues, and assuming that that's the goal that I'm trying to hit.
All right. So when we look at the actual budget, we'll see how close that was.
Okay.
But I do know it's a massive expense. Anything else that we think might be an operating expense? You guys got the big ones.
I guess utilities, maybe.
So that's like to keep those buildings running, right?
Yeah.
And then we have our, whatever you call it. Do you think this was positive or negative? Do you think we lost money every month or made money every month, 3 years in?
Well, you're still working on it, so maybe you're starting to make money in the third year.
That's what we would always tell investors. We're about to start making money. I think we said that like 5 years in a row. Yeah, so we were still losing money. Okay, so that was really great. So I think my biggest thoughts on kind of doing this exercise with you is, yeah, really being aware on what goes into revenue. So you're always going to get questions like, how do you come up with those numbers? That was a great call out. I'm like, you're going to be thinking about your price point, and then you're going to be thinking about how people buy. But then how do you get into that? How people buy? You have to think about your funnel. How many people are you reaching? And then how many people are actually converting? And then what are they actually buying it at? You guys might have more complicated business models than us, such as subscriptions or any variety of things. But I think just really getting granular. And again, it's not rocket scientists. Just think about how are we actually selling it? And then what are our assumptions? And how do we tell this story? All right.
Can I ask a quick question?
Yeah, please.
How do you guys think about like returns and budgeting for that?
That is a great question. I'm going to get to that in 1 second.
Okay.
I'll do that when we do our actual budget. And then like knowing, and then actually just laying out all your operating expenses. So again, just getting really simple about it. Like, what do we need? Your customer acquisition is going to be massive, or that's going to be like one of your top lines. Your staff is also going to be one of your top lines. So who do you need to, what kind of people do you have to hire? Do you have to hire, do you need a sales organization? Or are you going to be hiring marketing people? Are you going to be hiring executives, or are you going to be hiring more tactical people? It's just going through that process. And then kind of like, what are those costs associated with operating the business? So now I'm going to switch to our actual budget. Can you guys see that? The one with all the numbers? No? All right, I'll stop sharing.
Not yet.
Reshare. Not yet? All right, let me reshare.
But we will.
Yeah. All right, now can you see that?
Yeah.
Okay. I'm just going to zoom in. View. Okay, so this was June 2015. So like I said, it was exactly 3 years in. I think at this point, our revenues were about 4 million. Is that right? Okay, yeah, our revenues were about 4.4 million. So again, we were thinking about how do we get those e-commerce sales, and then also kind of our store sales. At that point, e-commerce was a lot higher, and we were doing very minimal wholesale. And there's assumptions behind all of this. They're basically what we talked about. How many people are coming to the website, how many people are you converting, and what price point are they buying at. And then we really had to focus on refunds. So refunds are a massive number. They were about 18% of our sales. So Marissa, for your question, so by this time we knew kind of like what we would expect, and it was 18%. And I think that was just based on historicals. Yeah, so we were always kind of, okay, so this was a forecast, so we're actually higher. But we were always around 15%, and the business was really seasonal. So in some months, like our refunds would be a lot higher. In the early days, we kind of looked at the industry norm. We knew we were going to have a really liberal refund policy because it was kind of part of our customer experience ethos, and we knew it was going to be hard converting people online if we didn't have that refund policy. So not only did we have a really liberal refund policy, but we also advertised that everywhere. So we looked at comparables and saw what they were. And for e-commerce clothing, it was around 15 to 20%. And then kind of assumed we would be on the higher end of that. Some interesting things is when we started selling women, our our return rate like skyrocketed, then tended to return or exchange a lot less. And then when we would like do specific initiatives, such as like buy 3, buy bundles or things like that, our returns would start to spike as well. So I think in those early days, it was just about knowing the comparables and what people in our industry saw, and then tracking it. And then we also, once we realized we were pretty high, we like stopped putting a prepaid label in all of our like we used to put a prepaid label in all of our packaging in the early days, and then we scaled that back and tried to get those refunds like under control, because that is pretty high, 18%.
Yeah, and then did you guys offer free returns?
Yes, we offered free returns, free shipping both ways.
And yeah, did you have to, like, when you did this kind of budget, did you have a line item of like expected just like shipping costs associated with the returns?
Yep, we had that in our operating costs.
This is really helpful.
Okay, good. Yeah. Okay, so that, like I mentioned, and then we did our COGS, and that was around 50%. So in the early days, that was actually a lot higher. So our first batch of shirts, we bought for $100 each, and then we sold for $100 each. So we made zero, like all of our money just went on the COGS. Your COGS are going to go down as you grow, because you're putting in bigger orders, and you're getting better terms with your manufacturers. In those really early days, I think it's just about knowing kind of what your industry is, and then knowing, like that conversation that we had about ministries is higher than the industry. Like, am I more specialized? Am I a lot harder to make? Or am I kind of more of is it pretty basic in terms of what I'm making? Any questions on COGS? So then our first bucket was kind of this administrative expenses in our operating, and we talked about a bunch of these. So like we provided health and dental, we provided 401, but we actually ended up stopping that about a year after this. There's random expenses that we had, such as like consulting, recruiting. This is one that we missed when we did our budget, and that was actually like a massive expense. You guys obviously won't be having this high of you guys obviously won't be probably expecting this high of an expense in your early days. But if you are doing things like incorporating in those early days or filing patents, that is going to be pretty.
Kate, you're muted.
Oh yeah, and then random other things like we talked about. So rent, office, postage is pretty high as e-commerce. So that was our administrative bucket. The next is retail offline. So those were our stores. So rent, as we saw, was a massive expense, but then you're thinking about all the things that go into operating a store. So taxes, insurance, end up being high. Marketing. So we had an offline budget, especially for marketing offline. And then this other operating cost, which is kind of not that helpful, but just like a lot of extra expenses that you don't really account for. We broke out our brand expenses because we were a consumer brand, and so we ended up spending a lot of money on branding. So my point is, you might not have a brand category, but what does that mean for you? Like if what is that specific bucket that will probably be important for you? So photography was a massive expense for us. We always had to update the website based on seasonality, based on new products. So we were spending quite a bit of money. As you can see, even the next month was massive on photography. And then go ahead.
A question on the brand expense is I think I saw 5 to 9%. Is that typical of a e-commerce company to spend that much on brand?
It's hard to say because a lot of people bump it into marketing expenses. But yeah, I would say it's pretty common to spend a lot, especially like we found a lot companies were spending a ton of money on photography, and we even brought that down quite a bit. We made a studio in our office, and like hired a full-time photographer. But yeah, that is a substantial cost. Give me half a second. Speaking of budgeting, my son's currently obsessed with money, so I still not give him $2 if he keeps on being quiet till the rest of it. So we'll see if he gets the $2. Yeah, $2 is pretty solid.
One quick question for students in the competition. thinking about comparables, if you're a brand new, just kind of like forming an idea, how do you find a good comparable? Like, what do you consider when you're looking at comparable companies? And is it okay to use maybe like, if you're looking at apparel or fashion, someone as big as Nike, or is that not going to be apples to apples because of their scale?
So I think you should know it just to know kind of like what is out there, and that information's free. Like, so you just look at their annual report, they'll have all their income statements. And so it's very good to just like look at their annual report and get that information, put in a spreadsheet and get familiar with it. And that also gives you kind of the big buckets. So if we were looking at a Nike, we would see, yeah, marketing's a massive bucket, COGS is a massive bucket, and just get a sense on like, what are these costs I'm going to be incurring? But I don't think like the numbers are as relevant. So I would use them as kind of like benchmarks or like things to aspire to. But in terms of figuring these out, I would actually be making calls. So if you're trying to figure out your COGS, so ours again was 50%. Instead of looking at Nike's, maybe I'm calling a manufacturer and asking how much it would be, or maybe I'm seeing how much my like Marissa said, I'm getting that contract and using those numbers.
Got it. So you want to do kind of both a top down with a comparable and then more like bottom up with your own actual numbers, what you expect.
That's definitely what I would suggest. And I think really being able to tell that story is a lot more compelling. And also for you to actually know, it's not going to be helpful for you if you put together this amazing budget and then you like can't pay yourself in a few months. So I think, yeah, actually getting those numbers a little bit more realistically. But I think that is a great point of actually looking at the industry reports to kind of get a sense. And then kind of online. So obviously no surprise here, customer acquisition. So we said comps are around 15%, right? Oh, wow. So around 16%, at least right there. I think that was more, okay. It's around 15% of our revenue. But I should have actually included public relations. So a lot of these are kind of customer acquisition. So we would pay a PR firm every month. We pay them in cash and equity so that we could have a lower budget. We ended up always outsourcing web development. We never hired a software engineer, so that was a big expense. And then someone said e-commerce platforms, that was also a big expense. Fulfillment is quite a big expense. So as you can see, that's almost 15% of revenues, just in terms of fulfillment. So that's a massive expense. So that's basically your warehouse who has all your product, and then they're shipping it out. So that includes Marissa asked shipping costs as well. And then we had design and development. So as you can see, we ended up losing money and also ended up losing money on the full year. So we were not profitable. I think it took us around like 5 years to even become profitable. We ended up raising about 20 million total. So I'm going to stop sharing that. So hopefully that was helpful. But I think the biggest takeaways are really just like thinking through what are those expenses I'm incurring, putting them on paper, and then you're going to be learning more. So just like as you learn more, continue to update your hypothesis, continue to update your budget. And then also I always get a question about paying yourself. You should be paying yourself. And investors are going to want to know. Like when we first started, we were like, oh, we'll get a night job at Lululemon and not pay ourselves and just like work as a cashier to pay our bills. But investors like don't want you to do that because they want you to be focusing on your business full time. So you should be paying yourself. I think we paid ourselves $50,000 the first year. And then the highest my salary was like $120,000. But that then went down to $90,000. So basically, post MBA, it was always between like around then, but it would always change. So I think when you're thinking about that, like actually going through that exercise, what do I need as a living wage? And then once you raise more money, you're going to get closer to that market rate.
This is all super helpful, and I also appreciate like the real world, like taking us through the real world administrative supply. Mm-hmm. One thing that was super interesting, you mentioned kind of that 100% cost of goods sold moment. And also you're basically putting forward this projection that we will end up like net losing money for the year. How do you balance wanting to have a document that's really accurate and like really actionable for business uses versus maybe like a more optimistic view that you want to show to investors? Like, how do you keep both of those things working?
Yeah, so I think there's a few things. I think one is really doing that exercise like in these early days, like you guys are at, and understanding like what are these costs I'm going to be incurring, what are the revenues I need to get, or I think I'm going to get, and just doing it a little bit more realistically. And then once you go to raise money, you can be thinking about, all right, if we're going to get this cash infusion, we can grow a lot quicker. We can maybe get to profitability quicker. We can acquire customers quicker. So then you're going to be putting out a little bit more of an optimistic plan, but it's going to be backed in the fact that you're going to get this cash infusion that will allow you to kind of accelerate growth. Your question about profitability. So I think at least a lot of the investors, so if investors don't know consumer, then they're just like, oh wait, what? Why would I invest in you? You're like losing all this money and I can invest in a software company that has like no costs. But if investors do know consumer, they know it's extremely hard to get to be profitable. So they don't necessarily expect you to be profitable now, but they want to see like a plan or a path, or we would call it a path to profitability. So we'd always have to show like, what's our path to profitability? How are we going to lower COGS? How are we going to excel and lower COGS? So we did a lot of work in terms of like what parts of our garment do we need to pay premium for, what part don't, and then how are we going to lower cost of customer acquisition. So those were like our big levers that we could pull. So opening retail stores actually lowered our cost of customer acquisition because there was just more word of mouth. People would see it as a banner and things like that. So yeah, to summarize, I think it's more about the path to profitability that people are really concerned about and actually having a plan to get there. Whether that plan comes true is kind of a different story.
Yeah, definitely.
So this was fantastic so far, and well, all of it was great. And your answers have been really nuanced and insightful. I think that because we have a for-profit and a nonprofit track this time, people are going to be a little more self-selected. So we've been less general. But if I could ask some very basic questions for people who might not necessarily have like a Sloaney level background or insight into this, could you say something about the biggest mistakes that you could see in a budget or the biggest indicators of fiscal health in a good budget?
So I think the biggest mistakes is not being able to explain your budget. So a lot of people might look online and see an income statement and just like plug in numbers. And then when someone asks, how did you get that revenue? It's like, oh, because we're going to sell 10,000 units this month. And then you say, why are you going to sell 10,000 units? And it's like, and you can't explain it. So I think the biggest mistake is really think of this. I know that it's numbers, it might be scary, but think of it as like a story. So if you're thinking about a story, how are we going to sell this? How are we going to acquire? What do we need to pay? And how are you like telling that story? And how does the budget make sense for that story? The biggest thing about fiscal health, I would say, is A, being realistic. And B, not like assume you're going to grow massively your team. So a lot of people are like, I'm going to hire 10 people next year. And you're like, who are those people? And they have no idea. So just knowing like, what is that growth? All right, I'm going to incentivize them one more time. All right, any other questions?
I have a question. I was a little surprised when you mentioned you paid for the PR agency with equity. Is that something that's typical? And if so, like what amount of equity should be earmarked for contractors?
Yes, we end up giving a lot of equity in those early days to folks like PR and like consultants and things like that. So I think for PR, like for our firm PR, I think it was like 0.25%, so like 1/4%. And that, like all equity, has a cliff and it's vesting. I think for the PR, like for employees, it should vest over 4 years. I think for the PR firm, it vested over 2 years or something like that. And so because of that, we were able to keep our cash flow, but also it's like they were a lot more invested in the company, I think. So we still have the same PR firm. So we had the same PR firm for about 7 years and still have them. Similar to our manufacturer. So our manufacturer ended up becoming an investor in our company. And because of that, they were like a lot more invested in us and developed products with us, and were a lot more of a partner than us. So yeah, I think with like all those relationships, thinking about like, there are things we just outsource. Like we outsourced a lot of our accounting, we outsourced a lot of our HR. So there's stuff you just outsource and you don't really need them to be like as much of a partner. Maybe HR should, but then thinking about like how, like if there are partners, how do we incentivize them in different ways, especially in those early days when we might be really cash constrained.
All right. Does anybody else have any other questions? I have one more, but I want to make sure that people aren't feeling prohibited. You know, we've still got a little bit of time. This was also incredibly thorough and very comprehensive. So if nobody has questions, I guess my thing is that obviously an hour-ish is entirely too short. But if you just had one broad takeaway or piece of wisdom to share with competitors, what would it be?
I think the broadest thing is like, it's not that scary. So I think a lot of people, I always hear folks being like, I'm not a numbers person, or I have no finance background. I think it's not so much you need finance background. It's more you just need to think logically about the business. So you should be really thinking, how are we going to make money? How are we going to be spending money? How are we going to be growing? And as a founder, that's like your number one job. So I would think of it less as like, oh my gosh, I don't know how to do numbers, and more like, all right, I'm thinking about the business, and then this is just a manifestation of my thoughts. And I'm assigning numbers here, and I've done the diligence, so I know what those numbers are true. I've talked to manufacturers, I've read the reports, but it's less about like, I need to be a finance guru, or I need to have a CFO, or I need to get a finance co-founder. It's more about, I'm thinking about the business, and then I'm just like making line items and putting numbers where the numbers go.
That's excellent. It sort of takes the curse off of it. I think that people who don't necessarily have a fully built out team can get intimidated by things like that very easily. So I appreciate your saying that. With that, unless anybody else has anything, I'd like to thank everybody for being here. There was a lot of Sloan representation, so thank you all for being here. Theo helped co-produce a fantastic event. And of course, Kit, we couldn't have done this without you. So thank you to Kit. Thank you to everybody who was here. And as Theo is sharing his screen, I'd like to say that we've got some other upcoming events. We've got a nonprofit track business plan for anybody who's watching asynchronously and might be interested in that. We've also got an IAP course. We're going to be revamping our application, and we'll also be taking people through how to talk about and write about your artistic practice and your entrepreneurial projects. That'll be tailored to things like ramping up toward a really polished elevator pitch, being able to write succinctly about your venture. And then we've got some timelines listed for application openings, deadlines, and for those who enroll in the competition, we'll have a lot of mentoring, there are rounds of judging, things like that you can read about on the website, or you can email me, and I'm popping my email in the chat right now. But it's been fantastic to see all of you. I hope to see all of you soon, and let's all give a great big thanks to Kit especially. Thank you, Kit, so much.
Yeah, thanks. It was so awesome to see you guys all. And I know a lot of you are going through this as we speak. So obviously feel free to reach out. I'm happy to look at any budgets, or if there's anything I missed, or if you have any questions, always feel free to email me.